Greetings, everybody. This is Jeff Scott. Welcome to this week's edition of my top-down review. My email address is hgsidoc@gmail.com. If you have any questions, if you're watching this on YouTube, please hit the up or down thumb, hopefully the up thumb if you like this, but at least I like to know people are watching. And if you have any comments, if you don't want to email me, you can certainly put it underneath in the remarks area. I do this as a volunteer. I've been doing it for a long time, and let's give it a rip. As I titled today, Chop, Pop, or Drop, because I think all those rhyming words with the OP are possible. Last week was a tough week. The week before was a tough week, especially if you like growth. We'll talk about where we're at. We're still not in a dangerous area, but we're getting close, and I'll tell you what I mean by that as we go on. As always, this is for educational purposes only. Anything I recommend is in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. I am independent. I paid for the tools that I use, and trading involves risk, and you are solely responsible for any decisions you make. I don't know if we'll go into any options analysis tonight, but options are considered to be even more risky. And I refer you to the Options Industry Council for their excellent website and information to teach you how to trade. Speaking of learning how to trade, my style is simple. I have been doing this for a long time. I started basically with CanSlim, and then I met this guy up here, Ian Woodward, who really advanced my aptitude for trading. I've read a lot of books. I found some people over the years who I trust and who I found to be excellent traders, and I've tried to combine things that I've learned from each of them to make me a better trader. I call it be your own guru because you're taking responsibility and not relying on somebody else. I own lots of different tools. I try to hide my desktop when I remember because I don't want you to be wondering why and what and how and when. Suffice it to say that if you check me out during the day and I'm not working, you'll see TradeStation or Thinkorswim or both on my computers. I use a number of indicator sets, some which are to mimic what I do in Hgsi. Some are from John Person, Sagar with Q Tools from sagar90.com, and Dr. K. I use his tools as well. When I do my after hours or during the day analysis, I'll also add EdgeRater and Hgsi. Now, from time to time, I may bring somebody who I think has got something good on to my video area and do a joint webinar, some live, some will be recorded. Just keep in mind that if I bring something to you, it's because I use it myself and I find it of value. I'm not getting paid anything to do that. I am truly an unpaid volunteer, and this is just education. Speaking of unpaid promotion, this is the website for Hgsi. I think it's one of the best all-inclusive programs on the market. Like everything else, it has things it doesn't do. It doesn't give you true real-time. You can download and update with real-time data from a number of sources, and it won't go below a daily chart, and it's not hooked up to any trading platforms. But when I want to do things and analyze the market and sort through and look at stocks and ETFs, this to me is the best program out there. And you could see others agree, including Gil Morales, one of the O'Neill disciples. Stock patterns are cyclical. Last week I talked about we were in the circle area, and were we going to roll over and continue down in stage 4, or would this be one of those head fakes and we go right back up into a continued further move up? It's important to realize this, and I think we're seeing it in living color, that high growth stocks fall like rocks. They may go up like rockets, but when they come down hard. And I don't care if you're looking at an industry group, a sector, a stock, an index, all of them will go through this pattern. And you need to know where you are, because based upon where you are is going to adjust how you want to play the market. I went a little bit more defensive, not fast enough. I took some more heat this week, still way up this year, but most of that is because I've been taking profits all along, both because I close on house number 3 on Monday, and also because I remember last year at this time. Speaking of last year was a pretty dramatic pullback and an even more dramatic recovery. So this year does not have to act like last year. Last year was rather unique. If we look at the market on Friday, you can see a lot of red there. If there was any strength at all, technology and discretionary had some green on the charts. Things like utilities and REITs, um, financials, materials, energy were almost all red. People keep saying we have fierce rotation going on. To me, it's even more than rotation. Um, if we look at the major markets, what do I mean by more than rotation? Let's just see what the indexes are showing us. So we're looking at the daily. So let's go ahead and let's maximize this. There we go. So here we're looking at the S&P futures. And clearly from the March 23rd bottom, we've had a rather massive run up. And you can see over the last 12 months, the low of the year occurred on March 23rd. The high of the year was about 10 days ago or so. Let's see what the date was. February 15th, February 16th. And the market's come down since. Now, it's come down, but what's the future sitting on? The futures are sitting on this yellow line, which is the 50-day simple moving average. Have they broken down yet? Well, they're in a person sell signal. They've broken through the 17. These are a couple of nasty candles, but look how many other times it has pulled back in this uptrend to the 50 and it bounced. The fact that we're sitting on the 50, if you want to be bullish, that's a good sign. I think we have to see what happens over the next few days because it is an area that is probably dangerous. If we take out the 50, do we go down to the 200? We'll look at percentages down in a few minutes. The Nasdaq futures have already broken through the 50-day moving average, so that's more bothersome. So in a person sell, and they've already come down over the last 10 days or so. If I look at the Dow futures, let me fix this, had pulled into the 50-day moving average. Now you can knife through it and scare us. You can have a deeper pullback to the 50, that would hurt here, or to the 200 rather, but often it will stop on the 50 days, so we will see. Certainly a pivotal point, a critical point. If I look at the Russell futures, healthier, much shallow of a descent, even though it's in a sell signal, still well above the 50-day moving average and had a doji, which could mean it's going to potentially stop falling, could keep falling. The VIX poked its head up above the 200 on the daily on the futures, but came right back down, really not doing much here. And the dollar, and this might be more concerning, the dollar popped here, which perhaps this is a bit of a sign of moving to something safer. But we shall see. That is the daily charts. And if I quickly, let's just put the weekly charts. We'll go back to the PowerPoint just for the essence of speed. I gotta close this, I think. The weekly charts just show you how much we've come. And you could see that the balloons for the highs of the year on all the major indexes on the weekly charts have been within the last 2 weeks. Rates rocket higher into resistance. Why do I say there's resistance? Well, if you look at the 10-year, it's pulled into an area that have been support previously. So there could be resistance here. If not, perhaps the resistance will come in around 2.2. But they have come up dramatically on both the 10-year and the 30-year. The 30-year got into that resistance zone as well and poked its head through. So rates look like there's nothing stopping them. If you look at the AD lines on the stocks in the mid caps or in the large caps, you can see in white the AD lines have rolled over, and you probably can't see, but in the red here, the small caps have dropped even more. If I look at the NYSE, you can see it has turned down. And then each of these major market ETFs have also turned down. So there's not a divergence there, but rather the AD lines and the indexes are all working in concert. Rates go up, then this light blue, which is the TLT or bonds, will go down. Breadth took a hit. Stocks above the 200 are still very high, but they came down quite a bit from up here to here in the last couple of weeks. More dramatically is the drop in the stocks above the 40-day SMA. Again, still in the middle, nothing scary, but if you want to see a big drop, take a look at the 3-month new high, new low, which went from overbought almost down to oversold in 1 week's time. So this was what we were worried about. This is what I talked about last week, that we were going to come down in the next couple of days, and we came down pretty quickly that week. If I look at the daily McClellan, your S&Ps are down, oscillator broke through the midline. Summation index can't get above this minus 216 or so number. And so nothing new here. There were divergences, and the divergences played out on both the daily and the weekly. I don't see any extremes or zero line rejects at this time. Buckets. Take all the stocks in the S&P 1500. Imagine you could put a Bollinger Band on every one of them, have the midline of the Bollinger Bands, and ask a simple question: how many stocks are above and how many are below their Bollinger Bands? And you can see here it's pretty much a 50-50, a little bit to the green side. Why is that important? Because typically in an uptrend, stocks will go between the upper Bollinger Band and then the midline and track up between those two. In a bear market, they'll go between the lower Bollinger Band and the midline. And I like to see excess. I don't like to see excess, but when I see excess, like over 30% of the stocks above the top of the Bollinger Bands or below the bottom, I would expect a market correction. I don't see that right here. Hindenburg omens, there have not been any major corrections in the last 50 years that were not preceded by at least one Hindenburg omen signal. So if you want to feel positive about this market, we do not have a Hindenburg yet. What's interesting, on both at Nasdaq and the NYSE, we have pretty much had the bottom fall out of the new highs, and we have very few new highs. We were as high as 19%. On the Nasdaq, we're down to 1.95%. We were as high as 17%, 20% 2 days ago on the NYSE, and very quickly dropped down to 2.04%. The one thing that's keeping us from having a Hindenburg omen is there are really no new lows. So I guess if you want to be bullish still, you can be bullish. Now, in Navy terms, they would always say that if you wanted to send a signal to somebody to slow down or stop, or you have a problem, you'd shoot, you'd fire across their bow. Sort of a wake up, folks, something's going on. Well, I would say on Thursday, when we had a line of kahunas to the downside across all the major indexes, the markets had their shot across the bow. You can see up here where often that's enough to flip it into a bearish tone. We're mixed here. I won't even say we're neutral, mixed to bearish. So we'll see if we can't get over this very quickly, or is there some negativity about to come. If you hear crying in the back room, I assure you I'm not in pain. It's my dog wanting treats. I'm trying to ignore him. This here is from EdgeRater. And so what I do every week is I save a copy of the Hgsi database, and then I can run analysis on it. So these are things that were saved Friday night of the 19th. And I walked forward 7 days to Friday night on the 26th. And I looked at various parameters and looked at what the response was as far as week gain on a week over week basis. The first thing you notice is it starts up in the left and goes down to the lower right-hand corner. That's bad. Why? Because ERG, which is a combination of EPS rank, relative strength rank, and group rank, high ERG stocks are high growth stocks. And this is a week where high growth stocks really underperformed. In fact, how bad do they underperform? The range here, if we ignore the first 3 or 4 bullets, because these are small numbers, range from +2 to 3% to really a -10%. So the higher growth stocks got hammered. You could see, and on this one, again, higher is good, lower is bad. To the right is higher EPS rank. The higher EPS rank, the worse you did. High relative strength did bad. Just a tough week for growth stocks. If we look over here within Hgsi, the group performance analysis tool, the S&P 500 was down 2.48%. In yellow, you have a bunch of the IBD indexes, IBD 50, the weekend review, the Market Smith, down between 5 and 7%. IB Live and IBD Ready live on Friday are lists that come out on IBD Live. Mike Scott's Focus 3, these are not pruned necessarily for patterns. In fact, there's another tab on his wonderful weekly spreadsheet where they talk about specific picks. But these are a list of good stocks or historically good companies. And you could see he had almost 90% or over 90% to the downside, down 10%. Again, these are not his holdings, nor are they his picks. But based upon his methodology, these are high growth stocks. And what we say over here? High growth stocks laid an egg this week. Since I'm mostly high growth, my buy watch filter buys and my current holdings were all down 5 to 7%. Now, the good news is I have hedges on Amazon. I've got puts from over 300, and the triple Qs, TQQQ, I've got puts on from 105. They have mitigated some of the drop, but I'm not going to come through this unscathed. I have too many positions. When the market sells off like this, I lose money. Sector strength deteriorated. You can see under the Woody indicator, we've got some red, green, and yellow, so it's pretty rough. This is when you're making money. This is when it's humming, when everything's green. Here we got a market that's not working together. If we look at the Q Edge tool, now the downside over the next couple of slides, and I don't know if you hear him, but there's my dog. The downside of the Q tools is that they're not powered by TradeStation for what I'm looking at, or Hgsi, or any free service. These views require Metastock data, and Metastock real-time data is going to set you back some money. On the slide above, or the top of this slide, we see sectors on the top line. The next line are industry groups and stocks. All the way to the right is the last month, and you can see a lot of green. Over 10 days, you see the green's getting smaller. Over 5 days, the green is getting smaller, and over 2 days, it's almost all red. That tells me that the market has been weakening considerably. If you look at over the 5 days, you've got 6 positive sectors and 5 negative. Over 10 days, it was 7 and 4. Over a month view, it's 8 and 3. And you could see energy, which has been an underperformer, has really knocked it out of the park over the past month. Although if we were to look at Thursday and Friday, energy was on laggard. Utilities, which you would think would be defensive, are lagging. Healthcare is lagging, as are staples, another potentially defensive group. Sagar was kind enough to add my buckets, and I'm still learning how to use these. But the amazing thing is I have buckets real time, and I'm really only looking at the far right, the dark red and the dark green, which would be the current day, versus the lighter color, which would be the previous day, because they're giving me a real-time basis of what's going on underneath. And when it starts to get extended, and Sagar talked about it on his weekend video today on YouTube, it can give me an intraday signal of being concerned, where in the past I've relied on end of day. Thank you, Sagar. Speaking of Sagar, I get a lot of questions how I use his tools, either intraday or outside the market, to make trades and to better manage my accounts. So I thought I'd run you through this very quickly. I always have this view up. The view looks different. Let me show you what that looks like in real life. This is in real life, and I could swing down here. And the difference is where this far left one, which is a little lighter color, says 1 day and is the same. That's because the market's not open today. But on Monday morning, everything to the right will stay the same, but this far left will go real time, and I'll get real time updates on market, on the various rotations, and I could look through real time at the various sectors, etc., and get an understanding of the market. So rather than use my slides, let me just show you how I use this. Let me make this a little bit bigger, and hopefully my dog will calm down. He's a little brat right now. So at the end of day Friday, communication services and discretionary, well, let me make this right. Let me use this arrow here, short, large to smaller. Discretionary and IT were leading. You could see communication has been, this tells you on what window and where it's been. It's been a leader for a while. Energy's been tough because energy kind of goes up and down. It's been down the last couple of days. You could see 2 days ago on Thursday, all 11 sectors were negative. Over the last 1 day, 8 were negative. If you go back far enough, you could see we had a really strong period where over 5 months, 6 months, 4 months, 3 months, and 2 months, almost all the sectors were positive. Now, this is going to be updated real time during the day. And if I'm interested, I can highlight the top ones. I like to make a heart on them and then I hit this right here. And this is going to show me the industry groups in those two sectors. Here we go. Let me make this bigger so you can see it. So the first step that I do, and I'll review this again on my slides, is I take a look at the top sectors. Now I want to rank these from the highest down, and this is based upon the strength on Friday. And notice that 53 versus 94 down, so there was clearly less up groups than down groups, but much improved over Thursday. Now, these are the industry groups that are moving. As a high growth stock guy, I'm kind of interested because semiconductors, equipment, electronic components, these are usually where I live. So what I'm going to do now is I'm going to highlight the first bunch. I'm going to put the heart there, and I'm going to pause it for a second and go get my dog to my wife. Well, I guess when you got to go, because he didn't want to go with my wife. He wanted to go outside. All right, so let me do that again. I can highlight the ones. I usually take the ones over 130. And now I'm going to hit this thing here with a magnifying glass. And what that's going to do is it's going to bring up all the stocks in those leading industry groups, which are in the leading sectors. Now, this is limited, or it is made up of the stocks in the S&P 1500. So it's not the complete universe of the stock market. Here it's ranked by, usually by 1 day performance. I could do that. Let's do that real quickly. And I get a sense of what the big movers are in this group. Now, I'm probably not buying the ones at the top. They probably move too much, AMCX, TRIP, CRE, Enphase. But this gives me a sense of what's moving by percentage. But what I really want to do is find those stocks that are undervalued. So it turns out that these 3 stars here will find me undervalued stocks with good earnings. So I do that, and now I've thinned that list down. All these stocks are in those industry groups that were in the top sectors that I chose. Some of these are well known. Look at this, Google is undervalued. But the ones that come to the top are the most undervalued. And I'm going to look at, we'll look at Micron later today. AMCX I looked at before. AMKR was the one that interested me. It's probably too extended already, but let's take a look. You can see over the last month, it's up 38%. So what I did is I said, let's take a look at AMKR, and I copied it. Then went and I brought up the Q Vital tool. The difference between the Q Edge and the Q Vital is the Q Vital is looking at the entire stock market. Q Edge, why are you not working? Oh, somebody's ready to come back. Is going to look at just the S&P 1500. So when I bring it into Q Vital, it's going to look at the entire universe. So I have more stocks. These are all the stocks that are in the semiconductor equipment. Again, no longer restricted by the S&P 1500. This shows me how undervalued AMKR is. It's high earnings quality, high potential for a short squeeze. You can see here that even in a down day, 87% of the stocks in this industry group were up. You could see incredible EPS growth because that's what I chose for. Undervalued stock, good EPS, that I asked to broaden out the universe here. Now, if I click, see what I want to click. If I click here, this will confirm that the industry group must be strong because it made it to my list. Let's see where that is. Let's see, hopefully it'll work. Got so many windows open, you never know. And this shows that semiconductors, which had been hurt, if you go over, there's 143 or 147 different groups. And you can see it was number 141 out of 147 on Friday, and it's got the most velocity of coming up to the top. but it had been very strong over the last month. It looked like it stubbed its toes. So let's go back to QVital. So if I now go into the peers, I see all the stocks here with their fundamentals and some of their growth rates. And then I can do my little 3 stars again, and I come up with these 5, all in the same industry group. Now, I don't look at them with meta stocks. I'm going to come over here, and I could just steal my symbols there, and there's a way to do it, but I've got so many things open, I'm not going to get a chance. I'm going to copy that, and let me find my TradeStation window. All right, so I bet this will do it now. So let's see what happens. Okay, so now let me go back to Vital. So let's go back down here. We'll go data, insert, blank row. All right. So it should be, if I did this correctly, of course, with all my windows open, there's no guarantee, that those are highlighted. And if I hit this, it should open them up into TradeStation. So let's see. I guess they're right here. So I could go through each of these. They're probably here already because I did this earlier today, and see if any of these stocks look interesting. So Amkr is the one that it picked, and you could see it had a big move off of trend line, weekly trend line here, flagging, and on the flag it looks like it's ready to break out. I'm not in love with that pattern. Ultra Clean Holdings, nah. AEIS, I like the daily, but the weekly, maybe. I don't like the color of the weekly. ICHR, no. MKSI, now remember, I'm looking for undervalued stocks with growth, so I may not find something that looks good on a chart pattern. ONTO, I did not. Now, Sager also did a scan earlier today, and he picked ANAB. And this is kind of what I'm looking for when I'm looking on a bottoms up. I'm looking for something that has pulled back and reversed. And he's got a new radar screen and scanner for stocks that pull back. But Anaplan looks really interesting. Anaptive Bio, where it's got a number of bullish signals. Earnings came out on Friday off of trendline support, and a reversal candle on the weekly. It's still red on the weekly, or magenta in this case, but that looks much more interesting. So I usually go through his tools and other tools trying to find stocks. So here is the sector tool. And so step 1 was ranking the sectors. Step 2 was pulling out the industry groups from the top 2 sectors. Step 3 was identifying everything above 130 and then bringing a list of the stocks in that group, doing the 3 stars, which pulls up across these industry groups the undervalued with earnings. Step 4 was I pulled Amkr over, pulled up its brothers, looked at them under the peers. Here's the peers here, which was step 5. And then step 6 is to hit the 3. I pulled up the leading stocks, reviewed the index, was strong, and then I started looking at them in TradeStation. Now, this is pretty cool, and you're probably thinking, well, why am I still using HGSI? 1, HGSI has all the signals that I use on a typical basis. 2, HGSI is a complete program with scanning. It has its warehouse views and charting. HGSI also comes with data. Most of us that have HGSI also use TradeStation or Thinkorswim. Now, the TradeStation indicators obviously work with TradeStation. They have a duplicative set in Metastock. On the Q tools, which are the spreadsheet tools, you've got to have Metastock. So HGSI can do so much by itself. I find this to be real time in the day during the market to be very useful. Now, canaries in the coal mine, these are something that Ian put together in 2013, I believe. Price line is now called bookings. It's fixed in the chart. These are the components. This is kind of like FANG extended. And boy, have they been in a run since April of 2020. They're rolling over, and that can't be good for the overall market. Now, you got some tails on the bottom over the 3 of the last 4 days. It failed to get back above the 50. I think that's going to be the line in the sand. They're leading the markets lower. You'll see how bad the ARK ETFs did this week. Kathy Wood, who's been outstanding, is in a lot of the high growth stocks, high tech stocks. And perhaps we can blame all this on Elon Musk. Why would I say that? Because Elon, a couple weeks ago, pumped up the Bitcoin market by telling everybody he was buying Bitcoin for Tesla and they would soon be taking it for cars. And then about a week ago, he said Bitcoin was too expensive and it was ridiculously priced. Well, he's now tethered some of the value of Tesla to Bitcoin. And so when Bitcoin came down, maybe that brought down Tesla. Since Tesla is a major factor in the S&P 500, did Bitcoin, Elon Musk, and Tesla create this market correction? Know your news and earnings. Since we're going into a new month, that means Friday, as John Person likes to call it, monthly unemployment numbers, so non-farm payrolls, unemployment rate, and hourly earnings. You can see here on Monday, we got some PMIs, Tuesday, motor vehicles, Wednesday, more employment, Thursday, jobless claims. Now, I think the biggest news of this week is tonight, even since I wrote the next slide, the J&J one-dose vaccine has been approved. It's more of a traditional vaccine. It may have less of the hassles around storage. It should be cheaper to manufacture, and hopefully it will get out there quickly. As a physician, and I'm not providing medical advice, nor am I giving you investing advice, I'm kind of interested in the J&J vaccine because even though its response rates are lower than the Moderna and the Pfizer, its testing was done later on when we started to see the variants, and it was done internationally, including in South Africa, where they have a nasty variant of COVID. And there were no hospitalizations and serious illnesses. And that's kind of what matters. If you get a flu-like illness, but you don't get real sick, unless you become a long hauler, that's probably going to be a good story. Now, back to the earnings. You could see another busy week. I've been out of my Zoom trade since it turned over. I lightened up my C, but I still have some of that. I'll have to reevaluate that. I think it's important to know when your earnings are. So important that I coined this thing in the lower right-hand corner years ago, that it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So let me be very clear what I do. If I am fat with profits, I will consider holding my stock over earnings. If it's a position that I'm concerned about, but for reasons of stupidity, usually I don't want to sell it, then I might sell a call at the money and buy a put at the money. Those two will neutralize each other out. And what I've basically done, I've locked my price in. If the stock goes up 20 bucks, the put expires worthless. I get to, and the stock gets called away at the current strike price. If the stock drops $20, then the call expires worthless, and either I keep the delta on the put and cash it in and keep my stock, or I can sell my stock at the strike price. If I have a Scott synthetic where I have a short put spread that I bought to finance the long call, I rarely will hold the short put spread going into earnings. I will always sell at least a half. And if I've made over 50% or 60% of what I can make in it, I may just close it. Why carry a double risk going into earnings? Now, something like Amazon, I usually sell a way out of the money call and use it to finance an out of the money put, so that I kind of collar how much I can lose. But for the most part, it's more important to how I manage the short position, the short puts, which means I lose money if the stock goes down, and I don't like sitting on those going into earnings. Now, if everything is going up on earnings and popping, it's one thing, but that's not what we're seeing this market. So growth stocks led on Friday, but they also paced the week's decline. Bonds have fallen as rates continue to push higher, although they eased a little bit on Friday. And as I mentioned, paradoxically, probably Elon tipped over the market with his Bitcoin comments. The indices appear to be at decision points as pullbacks approach support, and several growth stocks, as we'll see, bounced off their 50s. I'll be watching this week to see if we get a bounce or if the more broad sell-off continues. I keep hearing on the TV this is aggressive rotation. I'm looking at these numbers and I'm seeing the ARC, innovative technology, genomics, next gen, innovation down between 10 and 14%, 14.6. I see the FANGs down 18.2%. I see the S&P 500 on the week down 2.5, the 100 down 2.9, the Nasdaq down 4.9, biotech down 5.6, utilities down 6.0, the IBD 50 fund is down 6.6. I call that a market that's gotten clobbered, not just rotation. I've given up some more profits, as I mentioned earlier, but I'm still up big this year, and I've benefited for profit taking along the way, as well as a couple of key put positions. Again, we're at an area where you might expect a reversal. We've had 2 down weeks in a row. A week ago, I talked about market reopening stocks, and they certainly early in the week led. This may accelerate this week with the J&J vaccine, and the Wall Street bets crowd is at it again. Now, I also said last week that a 5% correction would not be surprising and would be normal. And now the question is, when should we be worried? So here are some of the major indexes. As we could see over 5 days, the transports were up over 5 days, but ranging from almost 5% down on the semiconductors, Nasdaq 100, Nasdaq Composite, 6% down on the utilities. You can see it was a rather ugly week in red. Few things moved up, mostly technology on Friday. These are the number of days since a 52-week high. So you can see how 2 weeks ago we were still fat and happy at all-time highs. The utilities have not been at all-time highs for 4 or 5 months of trading. Then this column here shows you how far we've moved off of these 52-week highs. And red for the utilities at minus 14 and 7% in yellow for the Nasdaq 100. And I'm going to show you in the answer of when we should be worried. Now, if we look at the S&P 500, it's down 3.5 off of highs. The NYSE is 3.6, the Dow's 3.4. So and the small cap 600 is down 3.9. So except for the Nasdaq 100 and the Nasdaq Composite and semis, we are within 5% thus far. Question being, when should we be worried? So this is an old slide. And yes, I need to update it, but you know, when it's already got 50 some years on the slide, and it was done by my teacher, Ian, I hate changing his work. These are very important slides. And what it tells you on corrections going back for 50, 60 years. And I updated this in spreadsheets, and it really continues to hold true. 70% of the time, the Nasdaq correction will be less than 8%, and 77% the S&P will be less than 8. So as long as you are less than 8%, you're safe. Odds are we'll stay less than 8, and then you could see on the S&P, it gradually less and lesser likelihood of a big decline. But on the Nasdaq, it's not so gradual. If we go below an 8% correction, it's probably time to be worried on the Nasdaq and also on the S&P. Hence why with the Nasdaq 100 down 7% and the composite down 6.9, that's why I've got the triple Q shorts on right now. And they're making me money. So odds are we bounce this week just based upon this chart. And if we don't, be careful, because you can't tell on the NASDAQ if it's going to stop at 8, 9, 10 or go all the way down to 50. So I guess you need to be careful. I'm certainly going to be careful with my money. Yes, I'm 40 minutes in. All I'm going to talk about the markets. Welcome to my how I do things. Because how the markets work have more to do with how much money you're going to make than me finding you some cool looking stocks. I'm afraid to tell you. Couple different things that give me clues to what might be coming in the market. John Person's HCDs to me have been my go-to signal for such a long time. And I found that signal to be in an uptrend. If I start seeing some low close dojis, I take them very serious. In a downtrend, when I start seeing some high close dojis, I take them serious. So we've been in an uptrend, right? So low close dojis are bearish signals. If I look at a monthly, because the month ended this week on Friday from trading, I have 120 LCD monthly bearish signals. I compare that to the monthly HCDs of 17. And look at this ugly thing here called the US dollar is one of the things that is bullish on the monthly HCDs. That's not necessarily good for your equities. So clearly the volume of bullish to bearish is favoring the bearish on the monthly HCDs. If I look at the daily go with flows, bullish 111, and these are the dollars there too. I can tell just look at the chart, or it should be there. These are signals that Sager does. Those are bullish signals 111, and bearish signals are more. I have to just open this up a little bit. 188, and then if I look at all person buys 34 and all person sells, yeah, enough said. There's a very clearly a bearish twist to the current market. If we look here at the E-minis, and every week I look at the same thing. I start with, is it a buy signal in green or sell signal in red? It's in a daily sell. Weekly still in a buy, as is monthly. Then I look at the paint bar. When it's red, I should be going short or holding. I should not be going long. Blue is neutral, so the weekly is neutral, still bullish on the monthly. When I start to see these dots on the top, they tell me that I've got some bearish divergence occurring, and I need to be careful. But that can go on for quite some time, and you can see it on the daily and the weekly, and the daily has broke. I see this thing here, and that tells me the Laguerre RSI fired to the downside. And now it's perhaps getting to the point where I might expect a rebound. My weekly bongo has gone red, and who cares about the high jump? We're way off the highs. This is ugly. It can still go further down. Clearly a bearish tint on the S&P 500. Now it does have pretty significant topping and bottoming tails. Not quite a doji by the math here on the futures, but you might start to see some dojis and sideways move before it reverses. If I look at the Dow futures here, similar thing, a new Laguerre RSI signal to the downside, red, sell signal on person. If I look at the Russell futures, there's my doji. Other than that, it still looks pretty ugly. And then the Nasdaq futures down below the lower envelope, so perhaps getting more and more ready for a reversal. This is what you're hoping to see, something like we saw back here in November, where I had a Laguerre RSI buy signal, a new John Person buy signal, and a reversal from a downtrend on the Nasdaq futures. I suspect the dollar will look different, and here's the dollar with the Laguerre RSI buy signal from Dr. K. Its weekly bongo is green, a new John Person buy signal and a green candle. Unlike the others, its monthly is in a sell, but it's in a weekly buy as well on the dollar. So not a really powerful looking market, but that's okay because sometimes they look like that before they reverse. Here I'm running the Major Markets Plus. Let me change this to the top-down view so all my stocks will be in there. And ranking it by raw combo, you could see that up the top are the TLT. Interestingly, with this view, somehow the 50s did well, and they were up 1.8% on Friday, still down 6.6. And this is heavily based upon one-day performance. Down on the bottom are gold, Bitcoin, utilities, industrials. So let's find the S&P 500 right here, and let's take a look. So remember I said a lot of things are hit the 50. So you look at the S&P 500, it's a beautiful uptrend. It's above most of its retracements on the Fibonacci's of the prior high. The prior high is this deep red one here. Interestingly, not much higher than or above where the 200-day moving average is, or below the 200-day moving average. We have turned down, but we pulled into the 50. We did that here, and we bounced. We bounced off of it both these times, but they did undercut, nearly got to the 50 before. Concerning, Bongo is now negative. I had a couple of mobile breakdowns. PSAR is bearish. I cut through my chandelier stop on Friday. Person indicator went sell, and I had a kahuna to the downside on Thursday. So concerning, absolutely, certainly could be beginning of a rollover. And when I look down here, the only bullish thing I see, perhaps, is that we stopped on the 50. As you can see, we're just a few pennies above the 50. So what are my expectations for this week? So the bullish expectation and the bearish. So the high road is going to be the stock bounces off the 50 and goes up to new highs. That's the high road scenario. Boy, wouldn't that be lovely? I think the low road scenario is pretty simple too. The low road scenarios, we go down here and we test the 200. And then the middle road is we stay within this box that was defined here in late January up to the peaks. I think that chop would be the middle road, pop would be the up road, and drop will be the reddish arm. I can't tell you anything more than that. My hope is that we see a bounce. Maybe the J&J is going to do it. I am concerned this market's at a very important point without a lot of cushion between the close and the 50-day moving average. If I look at the Nasdaq composite, a doji forming just below 0.5% below the 50. To me, that still counts as the 50. Can it turn around there? It could. Will it? I don't know. Again, the same story. We've broken down, had a sell signal on the weekly. Look at the run we've had up on the weekly. Is this broken yet? No. Am I concerned? Yes. We better bounce quickly, or that low, that drop or the chop are going to be at play here. I go and look at the Russell 2000. Looks better because it's still above the 50. Kind of looks like it's setting itself up in its own little trading range here. So let's see if this can hold above the 50. And the Dow really hasn't had much, it's a transports, never mind. The Dow also was pulled down to the 50. So I think you've got a lot of signals showing some damage, but we're not broken yet. And it'll be interesting to see what happens this week. Now, looking at some of the key things we like to look at normally, for whatever reason, my order is all messed up today, but the IBD 50, what did the IBD 50 do? Pulled down on Thursday to the 50, tested the Thursday on 50 and closed with an open bar, meaning an up day. It was up, whoops, there it is. It was up 1.8% on Friday. That was a bullish way to end the week, and we saw that technology was up on Friday. Still in a weekly bond go green, definitely not out. I did have a kahuna to the downside on Thursday. 50 is that line in the sand for me. If I look at the semiconductors, really tight move up. Nasty day on Thursday, above the 50, stopped at the 50 on the nasty day. Not broken yet. That might be a bellwether. If we look at biotech, not as pretty. Let me see if I can find it. You can see it. It's worst things when it's right in front of you. And you can see that biotech, the good news is it's got some pretty deep bottoming tails the last couple of days. But the really bad news is the biotech, if you just look at the top to the bottom, 11% drop in 11 days. As I'm out of LABU. I showed it to you last week, and my hope was that it was going to find the bottom, but obviously it's still dropping. The dollar, as we saw in TradeStation, the dollar has strengthened. And what does that mean? Look at this. If this was a stock, and I was into bottom fishing, I had a green candle low on Thursday. On Friday, I had a mobile breakout. My weekly bond goes green. I had a person buy a signal. I took out my chandelier stop and the Wells Wilder RSI. I had a pocket pivot and a kahuna. It doesn't get much more bullish than that. The dollar looks poised to go higher. Of course, it could reverse in one day. If we look at the VIX, you're going to just see a flat line here, but you can see on the weekly it's not doing anything. If the dollar shows strength, gold is in trouble. And you'd have thought with a weak dollar down on the bottom, that gold would be strong. Gold does not look strong, does it? Is it because people are running to Bitcoin? I don't know. Is it because of concerns about the economy is going to slow down and a weak dollar is not enough? I don't know. But gold this is called a bingo, which is the baby out with the bathwater signal. And if we can see a kahuna to the upside, maybe we'll see a reversal this week. Hard to be holding gold, though, waiting for that gold miners. Look even worse, down to the 500-day moving average here. Maybe in a few days, they'll get to the 1,000-day moving average. Silver Trust looks better, just pulled into the 50. So if you want to be a big believer in the bulls right now, God bless you. I've got to see some more proof. Now, if I go and I look at industry groups, you'll see I have 174 in Hgsi. I've got 9 industry groups to the upside. If I look to the downside, I have short-term only 2. Where do all my industry groups go? That means short-term, I guess they're sideways. But if I go in a more intermediate space, 5-day down, I've got 94. And 5-day up, I've only got a handful. So I usually take the bullish side. So let's just look at some of the stocks because people want to know what to buy. Let me say it again. We are in a dangerous zone. A bounce here seems to make sense. And if I see a bounce, maybe they're buying the dip. But I have to be aware of with other things I see that if we break down here, a retest of that 200 takes us a long way, okay? If you look, for example, before I move there, go to the S&P 500. I'll look at the Nasdaq first. The Nasdaq is 15% above its 200-day moving average. That's a huge move from here. All right. The S&P 500. %, above their, that's another almost 400-point drop. We've dropped 160, something like that. What would that do to your portfolio? The Russell to the 200, 29%. The Russell to the 50, still 3.7. So don't forget, the first 8 are gimmies. If we go beyond 8% in the Nasdaq and the S&P, you got to start protecting yourself. That means taking positions off, taking profits. If you want to stay in your option positions, rolling up and out. If you got short put spreads because you follow my Scott Synthetics, you got to close them and think about buying contra ETFs or options on them to protect your portfolio. If we bounce here, the game's still on. All right. Let's very quickly look at some of the bullish names. I've ranked them by raw combo and what came to the top, interestingly, is renewable energy. Right click, change to industry group. Plug Power. So remember I said a lot of things have pulled into their 50s and look interesting. Let's look at Plug Power. Is it into its 50? No. And it has a weekly person sell, which is bothersome. But look at this on the weekly, this bottoming tail. Here it is on Tuesday, and it's struggling to get back up above the 50. Now, Plug was an amazing story back here. Really has been an amazing story over the last 3 or 4 months. But for it to be relevant again, to me, it's got to get back above its 50. So I would not chase it here. Daco Energy, this is what I want to see Plug do. Deep pullback, again, deep bottoming tail on the weekly again, a new person buy signal, and it looks like it wants to go higher. Pretty deep pullback from 130 down to 88, but it does look like it's bouncing. Look at the earnings per share growth. That's probably the cause. Sunrun, another deep pullback and a positive move. Do these look like roaring buys that you need to go out and buy tomorrow? No, but these, if we're getting a bounce here, these guys might be telling you that already, that a bounce is coming. Look at Solar Edge, down to the 100-day moving average, and it's gone sideways. Big bottom tail in the weekly, and end phase, another similar pattern. So they look like they're basing. It's too early, but they've stopped going down, and I'm going to be watching this group to see if there's anything bullish in this market. Entertainment facilities, again, something that might go up now with the additional vaccine. I think SeaWorld surprised people on their revenue numbers. Look at the revenue turnaround here in the September quarter. I think that might be missing the earnings that just came out, which were favorable. Look at the move here. It's probably getting too expensive. But if you want to be outside at an amusement park or entertainment center, we used to love SeaWorld in San Antonio. I remember when my wife was pregnant with my firstborn and we wanted the baby out. We would go to SeaWorld and walk for hours trying to get the baby to come. So some of these entertainment stocks might become more compelling with that vaccine. E-commerce discretionary. Hgsi had some great earnings this week. I think Wayfair did as well. Now, interestingly, even with those great earnings on Friday, first of all, you notice where Hgsi fell down to, the 50. And then it bounced on Friday with a Bible gap up in a squeeze, a pocket pivot, a kahuna, and but didn't flip its chandelier. I already am in Hgsi. I kept my stock during going into earnings. That's a positive move. It's a high multiple stock, still has some great earnings, and I'm a big fan of Hgsi, although at some point, like C and others, it'll probably give it up. Wayfair had major run here, sideways move, and mobile breakup from a squeeze, not quite out of danger. I'd like to see it get above this red line, which is its chandelier, before I would touch it, which is about the high of the day on Friday, but that looks interesting here as well. Don't know anything about Revolve Group. It's another e-commerce discretionary. Must have had earnings come out because it really popped on Friday. 2 kahunas in a row always catches my attention. Looks like the earnings probably came out Thursday. They had a Bible gap, a mobile breakup from a squeeze, pocket pivot, kahuna, and then went up again on Friday. This one looks interesting and has some earnings coming in. Farfetch, sort of a belt hold day around the 50, opened up low, closed above, up on the day because it was down the day before. That's an interesting setup there that I might be watching this week. Stitch Fix pulled back to the 50, looks like it wants to go again. So here is a previously very strong group, and you can see even the index has pulled down to the 50. If this market holds here and starts to go up, I might be thinking this is a group that's going to have a run. Now, if we have a risk on play for the back to everything story, sometimes this group lags because it might be more movie theaters, gaming, casinos, airlines, cruise ships, etc. Speaking of gaming, I own 3 of these because they've been great for me. Caesar, Penn, and then DraftKings, which is probably in a different group. Look at Caesars Entertainment. Now, the interesting thing is, look at the revenue jump. Now, there's cheating in that. I don't mean cheating like breaking the laws, but they bought El Dorado Resorts. So they're going to be higher than they used to be because of acquisitions. But this one looks great. What a bullish looking stock, a kahuna on Friday. Bible gap up, mobile breakout. I guess I'm just glad that I own it already. Next earnings are not out to May. I don't know why, George, this is in the database twice. It probably needs to come out, probably because of the El Dorado acquisition. The other one I own is Penn National. I've owned this one for a long time. We talk about it all the time. How did I make $5 million from the bottom of February up until a week ago before I started taking the money out over the last year? It's because I bought things at the bottom and held on to my 1.4 base. So, over a little bit over a year, well, not really, March 23rd until the middle of February, I was up about a little bit under 400% on that investment. I know others have done just as well off that bottom. It was a all-time great time to buy, and if you weren't up a lot, get ready for the next opportunity because they'll happen again. Penn is a gaming company. Online gaming is a big thing. Great earnings per share growth. Still in a big uptrend. It's probably setting up another buy opportunity here. It may pull back to the 50. It's been kind of volatile here. I'm in it since the $35 range, so I give it a lot of room. MGM, a little bit of a pullback, a little flag, looks great still. These guys are also benefiting because Vegas is starting to expand the number of tables that can be open in their hours. Last February, what was the stock trading at? In the 200 range before the market rolled over. Well, there's issues there, I think, to Steve Wynn. And then last year, before it dumped, was at 153, and now it's back up to close to 140. This thing's had just a major recovery. Macau is back in business. You can see that by MLCO. Oops, I hit that twice. Boyd Gaming, I don't know much about what differentiates these guys except for look at these earnings per share growth coming in. Again, it's already had a big run. It's probably a little bit too extended to get in. Sometimes you just get lucky like I was. I've been in them for a long time. If these guys are doing well, then they might be buying more equipment. International Game Technology is another gaming company. They develop, manufacture, and market casino-type gaming. Uptrend, sideways move. Here's a mobile breakout from a squeeze. Pocket pivot and a kahuna in a person buy. This one is probably easier to buy, but it's clearly lagging the ones above it. So this is probably a very exciting looking group. Other special retail discretionary, I call this the junk stock. GameStop, why in the hell would you not do a secondary offering of say 2 million shares? You trade 44 million a day. Had you done, let's make it easy math, a 5 million share, and you did it at $100 off the current trading price at 480. So you did it at, say, 300, almost $200 off. You would have given yourself $15 billion of cash, Mr. GameStop board. With $15 billion of cash, you would have tripled your current market cap, and you would have had the opportunity to reformulate. Now we got the Reddit crowd pumping it up again. I can't play this, although I did play Tilray, and I think it was the same crowd, but they made me a lot of money. So thank you very much, Mr. Reddit crowd. Carvana, nice lower left, upper right. It is a little loose, but it's sitting on the 50 in a squeeze with a kahuna and a mobile breakout. A kahuna and a pocket pivot. No mobile breakout yet. Big bottoming tail like so many stocks. Does that look like it's going higher or lower? Again, that's why I'm a little bit optimistic. So many things have pulled into their 50, which have been bouncing areas before. Sleep Number, we were looking at a bed there today, breaking out at all-time highs. Great earnings per share growth. Look at the multiple, much lower than the growth. What's not to like there, except it's kind of expensive. What is the market cap on this guy? 3 billion, 3.8 billion. No wonder the salespeople are all happy. They probably get stock. Just joking, but he was pretty happy. Application software, go up to the top. Apps, one of my largest holdings, although as my friend Kathy calls it, I peeled some off earlier this year because I needed money for my house that I close on. Have my walkthrough Monday, tomorrow, close on that one Monday. I'll close on my Santa Fe house in about a year. It's starting to look pretty good. That's exciting. We'll have to do a live meeting in Santa Fe sometime. Great place. Big uptrend, pull back to support and move up. Does that look like it's going higher? Absolutely, but it's depending upon the market. I think these were the last quarter earnings. Earnings are out. It's under demand. Live person, kind of junky looking, but only because it's loose. Twilio, been a great lower left, upper right. It's loosened up a little bit from where it used to be. Look at the weekly, almost 45-degree angle up. Where did it pull down to and bounce from its 50? If this market's good, this is a stock you might want to be watching. Cadence, I'd sold out of mine, rolled back down, stopped at the 50. Again, bounced off the 50. We call that in the land of Ian Woodward free parking, and all great leaders like to bounce at the 50-day moving average. Look at 5-9 company. How many times has this got to bounce at the 50? You would have made a lot of money buying it every time it hit the 50. Well, it just hit the 50 again. Zoom, we sold out of it very quickly, although we made money on both the short put spread and the long call spread. It's pulled down to the 200, a little bit deeper, but another stock that could be setting up for a bounce. Home product stores, here's a beautiful chart, a couple of them, look at the first four. Builders First Source, right up that 50. Every time it hits the 50, you get nice little runs up. It doesn't go much below the 50. Where's it sitting today? Well, Friday it hit the 50 and had a kahuna. Williams-Sonoma, big run up, pull back, sideways move, ready to break out. If you can take out that chandelier stop, mobile breakout from a squeeze, person buy, pocket pivot kahuna. At Home Group, chandelier stops all the way up here. And I'd like to see it take out this junk here before I start chasing it. So I'd like to see it take out the chandelier. That's a ways to go. Restoration Hardware, I'm in this one. Another nice run up. Look at the weekly. 84 at the bottom of the market, up to 500. Earnings are soon, 329. Where's it sitting? Sitting at free parking. Free parking. Free parking. Cruise lines, these could really see a jolt with the J&J news. They've already started moving. I talked about them as one of the benefits of the economy opening up. They've already moved. Carnival, but still under demand. Royal Caribbean, I think they floated some more stock. Here's the index. I'm in CCL. Last week I looked at CUK to add to it, and it ran up until Thursday when it gave back some. I don't love anything about them except imagine if they're alive when no one's using them, what happens to the stocks and their numbers when people start to fly, or to, well, fly on airplanes but go on cruise ships. Charter Communications, no dividend, great growth, pulled back to the 200. I like this here, but it's hard for me to be buying it. It's an expensive stock. Don't know what Liberty Broadband C does, but again, pull back to the 200. I'd rather buy things that pull back to the 50. I just look at this area, lots of overhead supply. If it just gets back to where I bought it, I can sell it again. And that worries me on this. With that deep pullback. Comcast, man, I hate their customer service. Just try calling them, you get their, I hate them. I guess I shouldn't be complaining like that. So that's the only up groups. So I don't feel a reason to go chasing. I did find some stocks that were interesting. And again, I am not real anxious to go buy at the open on Monday. All right. When the best of the best stocks picked a week ago by Mike Scott ended up 90% of them were down. When all the IBD related indexes were down a lot, hard for me to be real bullish on my kind of stocks. But if this market turns, I think I showed you a bunch already that look like they're in position to start moving. Let's go to scorecard combo just so I can look at what industry groups. Application software, I showed you Cadence already. And I showed you digital. On biotech, I showed you Anaptys Bios in the Q tools, but I could tell you here, boring looking, but pulled back to the 50 and popped on Friday. Looked at some of the gaming stocks here. Alliance Data System, I've been nibbling on this the last couple of weeks, where it's come off this buy signal here with 2 kahunas in a row, and slowly working its way up. This used to be a real high flyer. It certainly stubbed its toes. In fact, you could see at the end of 18, it was a $240 stock, and they turned down some pretty big acquisition numbers. Under e-commerce discretionary, I've got DraftKings. I want to look at that one real quick. I like this a lot. Pulled back into the 17. Kahuna, pocket pivot. I think this is in the very early innings of this industry, and I like what they do, and I have a position in them. Look at the bottoming tail on the weekly. Generac, I just don't want to give up on this puppy. I still own it. Pretty fierce pullback this week into the 17, and a bounce if the market is strong. Might give you another chance. Weight Watchers, I know I've gained weight sitting at home. I bet other people have too. Look at what happened on Friday. I'd want to know if that was on earnings, so I might do a more info from the web, FinViz, and what's it going to tell me? Earnings call. So subscribers up, digital subscribers up, revenue down, margin, pretty good margins. I'd have to read through, but like I said, a lot of us have put on some weight, so maybe this could be a good time for Weight Watchers. We looked at a bunch of those. Here's an animal. A lot of us love our dogs. Here's an animal health story. Elanco breaking out here. Not that exciting, I should say. And I guess another way of playing, and I've shown you this before many times, playing Vegas, is Hgsi Properties, which is a REIT that owns a bunch of casinos. And look at this nice move, plus it pays a 4.4% dividend. And the other one I was going to show you here was Starbucks. You know, you got to scratch your head. Forget the name Starbucks. Look at the earnings per share growth. Huge. Big uptrend, sideways move, off of the 50, a mobile breakout, a new person buy signal, pocket pivot, kahuna, and with the stock going sideways, the PMC showed a positive convergence. I like Starbucks as well. So what do? I take those, I stick them into my TradeStation radar screen. So in this radar screen, which is called Sonar by my buddy Sagar, and we're looking forward. Sagar, send me that pullback thing. I can't wait. I can monitor. I call it the combo stocks, and the combo stocks I put my buy watch list, my current holdings, and then every IBD list I could find, Market Smith 250, weekend review, the IBD live watch list, and the Mike Scott list. And I look for things to pop up on my radar screen here or in Market Watch in my scanner. Here's my buy watch list, for example, and I'm able to put a lot of the different signals that are meaningful to me. And I know that Acadia Health looks good here because it's fired 1, 2, 3, 4, 5, 6 of my different buy signals. And I suspect if I go look at it, ACHC in HGSI, I'm going to see something I like. I think it's on my buy watch list. Here it is. And here's a healthcare company, healthcare facilities, uptrend sideways. And what's it doing off of the 50? A Bible gap up, mobile breakout from a squeeze, person buy, pocket pivot, and a kahuna. Yes, I like that one. So that's my ride. Let me be very clear. We're at an important inflection point. I'm expecting a bounce here, okay? just to digress a little bit, if I go and I look at, don't want that one, I want this one. Let's look at the dailies. Okay. Here is the spiders, the ETF. These are some auto-generated trend lines here. These are covering the Q tools. This to me is a line in the sand. I've got a lot of support. If I look at a weekly on this, I don't look so bad at all. Okay. So big uptrend, pull back, same place it's pulled back before, but on the daily charts on the spiders, what do I see? I see huge support underneath where we are. Let's look at the Qs. These here are support levels which have held now for multiple days on the daily. If I look at the weekly, we've broken down here, but still a nice strong uptrend. Can we come down here and retest this? Absolutely. My hope, no guarantee, is that this holds. If not, we've got quite a ways to get down to our next strong support. Line in the sand. Diamonds. On the daily, right into support with more support right underneath. And on the weekly, right into support. This is a place where you expect a bounce. That's why you draw support lines. So I can feel better about the diamonds. And then if I look at the Russell, on the daily Russells, right above support here has not come down much at all. And on the weekly Russells, what a big move up, far away from support. So I think we are very close to support in enough places. Look at the diamonds that I'm expecting a bounce here. That said, a rollover here, these are weekly charts, let me flip to dailies. A rollover here would not be a surprise. So what did I do? I have less positions. I raised cash. I have contra ETFs. I've got puts on my big positions. And the most important thing for you to hear me say, if you follow my Scott Synthetics and you are in any short put spreads, I'm sorry for that. You need to get out of those things. If you are way underwater on the short put spread, the reason why you bought a spread was because it prevents you from having unlimited losses. If the spread is going to cost you $5 at expiration, and to get out of it, it's going to cost you $4.60, just hold on to that spread. There's always a chance it's going to come back up and make you happy. But for the most part, when I started seeing with Sager's tools, these big magenta circles up there, which are clearly times to be concerned in the market, I started closing out any of my short put positions. Now, if you think the market's going to be reversing, having short puts sitting down underneath support, which go into your pocket when the market rebounds, is a different thing. So right now you should be raising cash. And if you're going to go long in cheap positions. This is a great time to buy calls because you can control your losses. So on that note, trade safe, trade well, not a time to be all in. Will they buy the effing dip? We'll find that out. I only use that, not swearing, because I think of some YouTube videos that are using the swear word for buying the effing dip. We'll see if they buy the dip. Have a great week, everybody. And thank you for watching. Goodbye.